Now, it would be rare to reach midlife and not have some money blunders under your belt. In fact, you may be living one out right now. But that's okay, because it's not all about getting rich or retiring early, but it can be about improving your situation. And even at our age, Gen X, we've still got time to make our future better than our past when it comes to our money. So welcome to part 5 of my cheat code series, and today I am pumped. And not just because today is the 43rd anniversary of that Thriller album coming out, but no, today we're talking about midlife finances and the cheat codes that go with them. And these are not the same old pointers that you're used to hearing, so let's load the next level. Okay, cheat code number 1 is to strategize your income. Don't just earn it. At this stage in our lives, understanding your tax bracket is one of your biggest levers. This could be your highest earning years, or maybe you decide to add a part-time job onto your full-time job, or you've taken on a side gig. You're bringing in extra income that way. All of that is great. But if that extra income bumps you into a higher tax bracket, then you could lose a big chunk of it to the IRS. A lot bigger chunk than is necessary. So here's the cheat code. Just smooth out your taxable income. And this requires you to look ahead and forecast. And what can you do? Well, let's just say that income that you're bringing in from that side gig, you could take that amount or a portion of that amount and decide you're going to put that much more in every month in your 401k from your main job. That lowers your taxes at your main job, kind of indirectly. Or there are other options. You could contribute more to an IRA or an HSA. Those just have a lot tighter maximum limits than a 401k. And just think about it this way. You're putting this extra money in the 401k. At our age, you'll soon have access to all of that 401k money penalty-free at age 59 and a half anyway, so you don't have to part with it for too long. Another way is if you get a raise, consider increasing your retirement contributions at the same time. That way you keep your take-home lifestyle income, steady while building your future flexibility. And folks, this isn't about tax evasion. It's just about being more intentional with your tax bracket. Okay, cheat code number 2 is manage your MAGI. Your modified adjusted gross income, or MAGI for short, quietly controls half your financial life. And you have a little control over it as well. Now, your MAGI is your total income after specific deductions and adjustments. And it's used to determine whether you're eligible for certain tax breaks, tax credits, and other benefits. Now, the reason I bring it up completely separate from cheat code number 1 is because it also affects your ACA premiums. If you get your health insurance off the exchange on healthcare.gov, they base your credits or your premium price on your modified adjusted gross income. So if your premiums are a lot more expensive than you want them to be, you may be able to do a few things to lower your MAGI and thus lower those premiums. Your MAGI also affects your future Medicare premiums. It could determine whether or not you get an IRMA penalty. It also determines your Roth IRA eligibility. And most people, they just let their MAGI happen. I know I did, always. So the midlife cheat code for this is to know the difference between what your gross pay is and what your MAGI is or can be with a little tweaking. And ways that you can adjust it on purpose are with pre-tax benefits that come out of your salary. You could time your bonuses or your freelance payments if you have leeway with that. Being strategic with Roth IRA conversions or capital gains, and contributions to either tax-deferred or tax-friendly options like IRAs, HSAs, 401ks, etc. By redirecting your money this way, you can make your income look a little leaner to the IRS in a perfectly legit and preferred way. Okay, cheat code number 3 is lock down your lifestyle before it imprisons you. Now, Gen X, this is often our highest earning stage, but it's also the easiest time to inflate our lifestyle. But think about it this way. What if the difference is buying a new car today, or instead not buying that car and retiring 2 years sooner? Or what if you reconsidered that trip to Europe? Instead, travel a lot closer, scaled it down, way down, and instead pay off all your credit card debt. Now, I'm not telling you not to spend money. I'm just asking you to reframe it and to weigh things out. $50,000 for that new car comes with a $700 car payment every month. Or with that same $700 every month, you could max out a Roth IRA every year. So here's your cheat code. Cap your lifestyle growth. Every year, look over your expenses and your budget and see if you can raise your savings contributions by 1%, just by looking creatively. And as your income continues to grow, just keep your core spending flat. Anchor your living standards intentionally, not emotionally. This one move compounds like an investment, but it also protects your peace of mind, not just your portfolio. Okay, cheat code number 4 is be proactive with your expenses. In your 50s, timing matters just as much as the expense itself sometimes. Now, I'm fully aware in the previous point, I was asking you to think before you spend any money. And this point is very similar because it involves forethought. The difference in this instance, maybe you do want to spend that money, but do it on purpose. So let me explain. If you know that you're going to need major dental work, or you're going to have to replace that car soon, or there's a major home renovation that needs to get done. So the cheat code is this. Consider tackling that expense now in your higher earning years and before you start scaling back or you get close to that retirement runway. And the reasons are, first, you want to minimize those large lump sum withdrawals from your tax-deferred accounts in retirement. Or if you need to take out a loan for one of these expenses, it'll be easier to do when you have a steady paycheck source. And also, preferably, you want to be debt-free in retirement. So plan these big projects. Plan to complete them while the cash flow is still flowing in. It's all about using your strong earning years strategically. Okay, cheat code number 5 is to audit your insurance like a risk manager. Insurance needs in early adulthood are different from the insurance needs of someone in their 50s. When we're young, we don't have a whole lot of assets to protect. We're more focused on basic coverage. But as your net worth increases, your insurance needs to keep up with that. And that is your cheat code, to take a hard look and make adjustments if needed. First, do you still need that big life insurance policy? I mean, maybe you do, but think about it. Things have changed. Maybe you don't need that level anymore. Secondly, look at your liability insurance coverage and make sure the levels are up there to protect all of your assets, including your retirement accounts. And you may even need to consider umbrella coverage if the liability limits don't completely cover you. Umbrella policies don't cost that much, and they can protect you in case of a lawsuit. I mean, insurance can be a reflection of how our life has evolved over the decades. Cheat code number 6 is to eliminate micro risks before they blow up. Big financial disasters often start small. An outdated beneficiary, a co-signed loan that you forgot about. And your cheat code is this: do a risk audit. First, check every single one of your accounts for the beneficiaries, who you've named. Make sure it's current, make sure it's still who you want it to be. Secondly, freeze your credit with all 3 credit bureaus. It's easy to do. Thirdly, be scam savvy. I mean, look at every phone call, every email, every text outside of family and friends. Look at those with a skeptical eye. And for us Gen Xers, that shouldn't be too hard, right? And finally, consolidate as many accounts as possible. It's easier to spot mistakes or mischief with fewer data points to keep up with. So protecting our finances isn't too difficult, but it does require action on our part, because one small oversight can erase years of progress. Cheat code number 7, your house needs attention and intention. Your house isn't your retirement plan, but it is a huge part of it, I'm certain. And as all homeowners know, a house doesn't just age quietly with you. And just because we own our home free and clear, doesn't mean we're going to live, rent-free either. So the cheat code is, in order to keep your house viable, there are some things we have to consider. Do you have a financial plan for the new roof or the failed heating and air unit? Not if it happens, but when it happens. Are property taxes and insurance or even maintenance on the house creeping up faster than your income? And do you have a plan for aging in place in this house? Because that may involve some upgrades. So that's your cheat code to future-proof your home. Your house needs a health and longevity plan just like you do. Cheat code number 8. Become a financial ally to your parents. Now, currently, Gen X is the bridge generation. We're still working hard, but we're getting more and more involved with our aging parents. And when it comes to our own money, we know we're supposed to be good stewards of it. But also when it comes to our aging parents, if needed, we need to step up and take this responsibility and do it with the best stewardship principles at the heart of it. And it doesn't matter if they have a lot of money or just a little. And I know all of this can be tricky because it can be perceived by our parents, depending on their personality, but it can be perceived as being pushy or nosy if we start trying to help them with their finances. They may even have control or trust issues with letting you get involved. And all of that, it's okay. But those are things that we may need to work through, depending on each individual situation. Your parents may be able to manage their money all the way up until their 90s. This may not even apply to your situation. But I think as children of aging parents, we do need to keep an eye to make sure that there aren't any cognitive issues. We don't want them to fall prey to scammers. So things you can do if your parents are kind of hesitant is to just start with simple things. Offer to pay some of their bills for them, or offer to help them organize their finances. Review their insurance and their beneficiaries with permission, and just be a trustworthy helper before you ever need to step in fully. Because it's not about taking control, it's about earning trust early so you can protect them later. So these are all under the radar moves that can put you ahead financially. So you can make bigger and smarter money decisions from here on out. Because the real financial flex in your 50s isn't how much you make. It's how well you manage the levers that already exist. Now, if this one hits home, stay tuned. Next up in the Cheat Code series, we're diving into your midlife retirement strategy. You do not want to miss that one. And while you're here right now, check out this video. 7 things that Gen X should stockpile in their 50s before it's too late. It's linked right here, so click fast. Thank you so much for watching today. I'll see you in a few more days. Bye. Today is November 30th. In 1982, Michael Jackson released that Thriller album.